Good afternoon, everybody. Welcome, welcome. welcome back from the holiday weekend, back from the little bit of a hiatus away. Had some issues with the charting platform and had to make a bunch of changes around that, but we're all ready to rock and roll and all good to go. So hopefully everyone had a great holiday. Hopefully everyone had a, spend some time with the family, spend some time with the kids or whatever, enjoy the weather, whatever your thing is, and then go from there. But markets were okay today, a little bit grindy. I think it definitely could have been nicer, but, all things considered, not too bad. Before we jump in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list. You'll be notified every time one of these videos goes live. Along with that, in the email, we talk about a bunch of stuff that we just don't have time to talk about in the video, and that's going to be everything from stocks, crypto, options, you name it. If it's moving, it's going to show them in there at some point, so make sure to sign up first so you don't miss anything important. Over on the live trade room subscription and trial info, from here, you can register for a free 3-day trial in the room, hang out with us for a couple days, see how we trade, see how we approach the markets, ask some questions, just have some fun with us, hang out with us for a couple days, and see how we do things in the in our everyday lives when we log into the live trade room to rock and roll. So make sure to sign up for that if you haven't done so already, and see what that's all about. Now, taking a look at the news for tomorrow, news calendar is pretty full up. We've got a decent amount of stuff going on. Out of Germany, we have the German manufacturing PMI for May forecasted at 56.8. That's coming out at 3:55 tomorrow morning. At 4:30 tomorrow morning, out of the UK, we have the manufacturing PMI for May. That's also forecasted around the same thing, 43.5 in this case. At 8:30, we have the USD non-farm payrolls. Pretty big deal. Non-farm payrolls tend to be a pretty big mover. That's not something that you necessarily want to mess around with. Non-farms can get really nasty and cause some pretty interesting movement. Now, it's happening at 8:30, so it is a little bit earlier in the day, and that means that, well, hopefully, fingers crossed, we can get things bumping a little bit after those non-farm numbers come out. But we do have non-farm payrolls tomorrow. For May, forecasted at 189,000. At 8:30 as well, the unemployment rate forecasted at 3.9%, the same as previous, so unchanged for May. On 10 o'clock, we do have the ISM manufacturing PMI for May, forecasted at 58.2, but honestly, nobody's really going to care about the ISM PMI just because we have non-farms at 8:30. So, got to pay attention to those non-farms at 8:30. That's going to be the big one for tomorrow. Definitely something that we need to keep our eyes on. Now, looking at the market, starting off with the euro, again, I was having some charting issues. I had just a load up trading view, so we'll do the analysis. The euro is grinding down, and it has been. It looks like it's very overextended down here, and it's probably going to want to bounce back a little bit. Now, the reasoning behind that was simply that we had this really tight little channel inside of here. You can see the lows, and they blew off. In this same thing there, but we finally had this giant kind of like major support that was at 15,380, and it created a new layer. Second. Just have too much stuff going on here. Let's do this. Drop that down. All right. Any better? Testing? Kind of looking at the... Sorry, I just happened to notice that the frames were dropping like crazy. There we go. Let's see if that helps. Never a dull moment, right? Drop that. There's probably something stupid in the background updating. And that seems to have fixed it. Okay. We're back to normal. Alright, anyway. So the... sorry about that. The euro has been grinding lower, and we were looking for a corrective phase. The corrective phase has bounced back up. We're now creating somewhat of a larger channel. Now, the larger channel... We're in a little bit of a situation here where the earlier channel lows still are applicable. They still fit, and it kind of looks like it's the midpoint of the larger channel. So the fact that we have a nice bear channel to the downside and the midpoint holding pretty nicely, might as well widen it out and see if they want to go back down to the lows and test them once again. I don't necessarily believe the sellers are going to be able to take this down yet. I do think that the sellers are going to want to sell into this, but it looks more likely that they're going to try to dig a little bit further up to try to grab some better areas of interest. Next level of resistance above us at 17,570, and then above that at 17,980 to try to push the market back down. Now, we do have the falling channel high resistance in play that could cause some short-term, but I mean, for the most part, with this kind of bounce back, it wouldn't be a surprise at all to see them dig a little bit further up to find some resistance up here to then try to push the market back down. So even though we are in a bear market, pretty obvious if you zoom out on the Euro chart, this is obviously a bear market off of the highs, I'm not necessarily thinking that the sellers are going to come in right this second. I think they're going to want a slightly better price, so I am short-term looking for long plays towards the top of the level of resistance we were just talking about at 17,570. And then if we can get a little bit more bearish continuation to the downside, from there, long-term, I am still bearish, looking for further dropping. Just have to wait and see where they want to do it from more than anything else. Over on gold, we have a relatively range-bound, choppy, sloppy, gross market. There isn't much going on here for gold. It's having a heck of a time getting anything done. We do have a rising wedge bottom, and we do also now have a little bit of a trap high. And this is one of my favorite types of trap highs, because we have what we call a mid-peak trap, right? We have the push-up. They form a little bit of a middle point that doesn't break above that first point, and they come back and trap that mid-peak and drop lower. That's the anticipation. But you generally want to see some follow-through, and this certainly is not the best-looking follow-through bar in the world. So we are still really chopped up. Sellers are fading highs. They're selling all of the normal areas that they would sell, but they're not really continuing, and that tells me that we're still in a range. Nothing has changed, right? So we're looking for sellers to push down to the lows of the range, take some profit, bounce the market back up. Come down to the lows, buyers underneath the lows, push the market back up, take some profit, and we cause this kind of back and forth chop and slop where everything just looks really gross like it has been for the past couple days, arguably for really most of May. But, you know, where it stands right now, we're still in a range. They just faded off of the highs. We are likely going to see more continuation to the downside rather than the upside, but, I mean, it's anyone's game right now on gold. This is the type of environment where, on a 4-hour chart at least, this is something that I would rather just stay away from. I'm not a huge fan of the markets when they're like this, back and forth, choppy, sloppy, until we get to the extremes. And the extremes have already faded off of the highs, so I'm looking for, guess what? Another trap, right? Swing low, swing low, swing low, rising support, just something. Right where it is now, smack in the middle, no thanks. It's just a really gross spot on gold, and I would rather wait for a slightly better location. And the next location above us isn't all the way until 13.8. And I think what further makes this even more difficult is, of course, the fact that we're floating right on top of the 1300 level, right? If we could get away from the 1300 level, I would be a pretty happy camper. You know, 1300 smack in the middle here. I hate it when we're stuck right on top of these big levels like that, and this certainly shows why, right? Every time we've gotten stuck around this area, I mean, they're holding above it by a little bit, and then it cracks through, and now they're holding below it for a little bit, and then it just chops around. It's just nasty. So for gold right now, honestly, I'm just kind of sitting on hands. There's not really much I want to do on gold until we get towards the extremes, and the extremes don't happen until at the earliest 1291.4 on the lows, and at the earliest on the highs 7.3. Where it is now, just let the market do what it wants to do, chop around until it gets to an area of interest. Over on crude oil has had a meteoric drop off of the highs, crashing down to earth, and, well, that was quite the failure off of the top. Now, we've been talking about a failure on crude oil for quite a while, right around this area, and, man alive, did that follow through. Now, with that follow-through, that's a little bit too much, right? I mean, everybody likes it when they're short, and it's just absolutely hammering into the ground and drilling a borehole through the center of the earth, but eventually, it's got to stop. And that's what we had at this bottom here. Now, they did create multiple levels of support. That support is at 66.54 and 65.97. Now, do I think that this is the bottom and we're going to go rallying higher? It is a bull trend. This is a nice pullback off of that bull trend. Am I convinced here specifically? I think maybe initiating small positions for longing to the upside makes sense, but I'm certainly not convinced yet. We've got a lot of emphasis that the buyers are going to have to put forward to negate this gigantic drop off of the highs. And the fact that the sellers were so pressured to the downside, I mean, look at this. These are 4-hour bars, and there wasn't a single bull candle until way down here. So the sellers meant business. And when they mean business like that, that's going to make me a little bit concerned about getting too early to the party and trying to buy in. I would rather see a trap below the lows, try to dig below 65.80, and find the next level of support, which is going to be down at 65.32. That's the area that I'm really looking for in terms of interest for the buyers to start kind of picking it up a little bit. Now again, if we zoom really far out, we can see that this is a major swing high retest, but very infrequently do these swing high retests hold with, you know, to the tick. That doesn't happen very often. It usually chops through it, just like we had here, right? Ground through it a little bit after it broke away. I'm anticipating the same thing. I want to see it grind down maybe towards 65 to find support, and then bounce the market back up from there. On the sell side perspective, we do have a nice rejection off of the 38.2%. That's 68.49 on the dollar level there. Really nice bearish momentum off of that area. Beautiful rejection there, and now we are continuing lower to the next level of support, starting at 66.54. I am assuming there's going to be some bouncing there, both sellers taking profit and buyers, again, trying to accumulate into that previous swing high for another bounce. But for the most part, I really want to see this get a little bit lower. I want to see us test into 65.50 at the least, maybe even down towards 65.32 into 65s, and that's going to be where I think most of the buyers are going to start kind of coming back in and trying to bounce the market back up. For now, short term, looking for bearish momentum to the downside, even after the inventories, looking for more bear continuation lower. 66.54 is the area of interest next up, and that's kind of where we're looking for as an objective for the sellers to push the market down to. Otherwise, looking pretty good. On crude oil, it's still bear's side in a bull trend. Buyers are going to be looking for a deal here. I think the deal might be a little bit lower yet. And then over on the S&P. The S&P was a little bit of a hard one. You know, if we look at the overall structure of the market, it's pretty obvious there's some form of a range here. Whether you draw the range there, down here, maybe the lows, maybe the overall low, it doesn't really matter because it was obviously a range. The big thing that we were questioning on this breakdown is this breakout real, or is it going to be like all of the other breakouts that ends up being a fake out breakout and then popping right back up again? In this case, it looks like it was a fake out breakout because it popped right back up again, and now the important part is that we are back inside of the range, right? We failed out of the lows, popped back up in. Now we're looking for buyers to regain emphasis on those lows. Now, I don't necessarily believe the range low for me personally fits best there. I like the range low right around there at around 2710-ish. I mean, it could be a little bit lower. Let me get the exact number here. 2706.75, I think, is the best fit for the range lows. Let me get that on there right there. 2706 half, either way. And then we have a range high up at the top here, pretty obvious, at 2738.75. So what I'm looking for is a push back to retest the lows of this support and then bounce it right back up to see if they can complete a breakout of the highs now that the low side has been a failure. Usually when one side fails, the other side picks it back up and pushes it back through the highs. So we'll wait and see, but definitely looking for more continuation to the upside now in the short term on the S&P. And, you know, in the long term, I'm not necessarily convinced that the sellers are done, but we are holding highs, right? This is something that we haven't really seen for a while. We were talking about shorting inside here, inside there, on this rally up, inside here. Didn't believe any of these, didn't even believe this one, but now we're starting to see there's a little bit of a problem with the shorts. The sellers are creating a rising support. They're fanning to the upside, and with that fanning to the upside, that does potentially tip its hat a little bit towards a trend reversal. So getting back down to these lows, back towards 2520s, making a new low, it's getting a little bit less probable, right? We're looking at a probability now of breaking back down to the lows of around 30% with these successive higher lows, especially now that we've broken back above a new swing high. This is the big thing, right? We pull in, we pull down, we need to break a swing high. Now, this is a minor swing high. Once we start breaking above these 2800s, then we have really firm confirmation that we're probably going to be rallying to the upside. But so far, I have to tip the hat to the buyers right now. We're looking at a probability of retesting those highs, all-time highs, closer to 60 to 65% now. So the sell side running into a little bit of a problem in the long term. In the short term, you know, again, I would like to see a little bit more bearish momentum to get a physical test of 6.5. Doesn't necessarily have to. It did come close. Made a low of 2707. I would prefer to see an actual test of it and then a bounce back up. But I mean, either way, I'm not going to argue over where it is now. I would rather just look for a quick little tap down to, you know, into the sixes, and then a push back up would look pretty good. And I think buyers, again, that probability is starting to tilt a little bit with all these successive failures from the sellers. Could be looking for a rally back up towards 2800 in the coming months. We'll have to wait and see. But right now, looking for a pullback towards 2706 quarter, bounce it off of that, and look for more bull momentum to continue. And then from there, we'll have to wait and see. Especially going into non-farms, Non-farm payrolls can definitely mess things up a little bit. You got to be careful with those NFPs, but we'll see what they have in store for us one way or another. So that's going to do it for the futures outlook. Relatively straightforward, not a whole lot going on, across the board, but still plenty of opportunity. I closed down the stocks and everything else because of that those latency drops. Let me see if I can reconnect here. Let me see if I can reconnect here and get this back open. Hopefully, it doesn't make too much of a dent in my upstream here. There we go. All right, so we'll take a look at our usual candidates. First of all, of course, Twitter is one of our usual candidates. We're always looking at Twitter. Been talking about longing Twitter for quite a while now, and we are seeing more continuation to the upside. Still haven't pulled back off of those 35s. We need to break above them, right? We came close. We tested it today. The high today was 34.97. I would like to see 35s breach, and if we can start breaching 35s, then we're looking for 36.60s next up. So definitely have a good shot at it. Twitter is looking awesome. Been talking about buying it since the gap fill down here, then a rebuy back down here again, and I mean, I can't argue with the momentum to the upside. We're up, $4 or $5 on the move. Hard to be upset with that kind of movement. Twitter's looking good. Very extended to the upside. It does need a pullback to maintain health. But it doesn't look like it's ready to yet, so definitely still on the gas pedal to the upside for Twitter. On Boeing, that was one that is a little bit kind of lackluster. Now, again, this is one that we were talking about picking up off of the lows, the low retest down here and through here. Beautiful momentum push to the upside, and we were looking for 350s. It gapped all the way up to 365. It is now pulling back a little bit. This still does kind of look like a little bit of a channel to the upside. A little bit ugly on the back tail end there, but this it could potentially look like a flag as well. And that's kind of what we're looking at. If we can start breaking back above 360, then we're pretty much dead set on pushing back up towards 370s and back up towards new highs. Just needs a little bit more go juice in the tank to see if they can breach those tops. And then from there, the sky's the limit. We'll have to wait and see. Bad pun, sorry. I know it's Boeing, whatever. Some of the other movers today, a big mover today was VKTX. Really cheap one, VKTX. You can see I did have some trades on there. But VKTX, for the most part, is a nice bull trend. And this is something that you will see on occasion where you have these penny stocks that kind of, well, penny stocks. I mean, it's a $6, $7 stock at the time. Now it's close to put in a high of 936. But you have this decent trend. I mean, this is a daily chart, and this looks pretty good. Pulled back for a little while, traps the lows, and now we're gapping to the upside and running away. I mean, normally with penny stocks, I'm thinking immediately pump and dump. But this is one that could stick around for a little bit. It's not something that I'm necessarily that big on in terms of, hanging on to these really cheap ones. But if this stays high, right, if this stays, above 8, I really wouldn't want to see it get back 8. And preferably, I'd like to see it close above 9, which it does still have time to do. Might have a good shot at running a little bit further up. Don't know that yet. We got to wait until we get closer to the end of the day. But it does look like this might want to get some continuation going into tomorrow. So definitely worth watching tomorrow, VKTX, if it closes strong in the day. It has a chance to. It could give everything back and it could collapse lower just like every other pump and dump. But this does have a nice bull trend working for it. And I'm sure a lot of buyers down here definitely took profit as soon as it opened up and realized once it started getting really strong, probably re-entered looking for more continuation. We'll have to wait and see, but VKTX does look pretty good. Might see a continuation day going into tomorrow. Fingers crossed. We'll see. One of the other ones, of course, Box. This is a newer one. I mean, it filed for IPO not too long ago. It's a pretty fresh stock compared to some of the other ones. 1, 2, 3 years. Those are pretty new when it comes to it. And for the most part, it's been in a range. Right? It's been just flat range bounds, testing the lows. I mean, there's a huge amount of support that's coming in at 18s and lower. And really, it was having a lot of resistance here at around the 20s. Finally broke up above those. Pulled back, held it as support, broke down momentarily down to 17s again, and went flying higher, held it again as support, and we're off to the races. So I'm anticipating kind of a similar situation here, where we have major support down here at 17 at 75, major resistance at 20, now is support. Well, guess what? We have another area of interest at 24, and that's going to be the next major key area of interest that I'm going to be looking for. Could buffer it a little bit and say, you know what, maybe it's a little bit higher up, but I really do like this kind of in a little bit, right? 2380s in that zone, because we have a test here, We have a little bit of a breakout there, but that's also the top there. That gives us a little bit of a buffer zone. So box, I think, is definitely on the list of interesting. I was kind of hoping it dig down into the 24s today. It made it as low as 24.49. Didn't quite get down below 24, though. So it didn't quite make it. I would like to see it make it before I start getting a little bit bullish on there, but this is a really nice gap down. Good continuation lower, and buyers ate that up. Now it's just a matter of, can the sellers push down one more time? And that's really the area of interest for me. 23.80s, I think, is the hot spot. Aggressive buyers will be floating in at 24.50s. Slightly less aggressive buyers at around the 24 whole number. We'll have to wait and see. But box is looking pretty good for some potential continuation back towards the upside. Primary objectives, I would love to see, 29s, and really love to see that big hole number at 30. We had such a hard time at 20. Would be very interesting to see what they do at 30. Could be a fun time. We'll wait and see. But box is looking pretty good. So that's going to do it for the overall outlook going into tomorrow's trading, and that's going to be, we should be able to get back on a normal schedule again. The trading view charts, although not optimal, did work out pretty well. So we'll be back like normal on Monday. Of course, tomorrow being Friday, be careful for non-farms, but on Monday through Thursday at 1 p.m. Going through our market analysis. Outside of that, though, as always, underneath the little video here, click on the subscribe and the notification bell icon so you're notified every time we go live. If you have any questions, feel free to send me an email, jbrink@slingshotfutures.com. Until the next time, though, rest up, and like we always say, it doesn't matter what market you're trading, always, always make a plan, trade the plan, follow those rules, you'll be A-okay. Until next time, we'll see y'all then. Have a good one, enjoy the weekend, and we'll see y'all on Monday.